Hey, what's up, guys? Sam here, and I'll be doing the free video for Friday, June 3rd, 2022. So the short week is over. 4 days of up and down trading in a box is complete. And the question we have to ask ourselves is what's next? What happens next from here? Has anything changed? I think maybe that's the better question because asking what's next, well, who knows, right? No one knows. But asking ourselves, have we made progress here or have we lost ground? In terms of like maybe like a football game, right? Have we moved the ball forward 4 yards, 4 yards, first down, right? And have we gotten a first down? We don't have to get touchdowns, right? Just are we getting first downs? Are we getting 4 yards a carry? And then does that later set up the 50-yard bomb for a touchdown? And I just finished doing the premium video for the folks in the gold room, and I'm seeing a little bit of progress forward. It may not seem that way because of the volatility intraday, but there's a couple of things that I was looking at. I'm just going to quickly share them with you, and we're really just going to focus on SPY. I know you guys, the YouTube's loves stock picks, but I think arming you with this information is going to be a little bit stronger because that way, if you understand what we're about to talk about on SPY, you can go out there and either buy or sell anything, right? Because everything's going to move with SPY. For the most part. So if you understand SPY, you can go out there and buy those semiconductors. Or, if you understand SPY, you can go out there and short the ARK funds and join the crowd. So a couple of things here, right? Last week, we had a very big up candle, right? On very low volume, but big candle nonetheless. We had a very big up candle. We're in a down market on the weekly and the daily. Very obvious. Whenever you have such a large candle, I think it was like somewhere like 8 to 10% last week on the index, which is, that's a monster move for an index. Having to stall and kind of consolidate a little bit is normal and healthy. So what you don't want to see happen is you don't want to lose structure in your consolidation, right? You don't. It's okay to just run the ball for 2 yards and then 4 yards and then 4 yards, but it's not okay to take a sack for minus 30 yards, right? And so the question we have to ask ourselves as we look at this chart is, are they moving the ball forward or are they not? So let's kind of go over a couple of points here in terms of advancements that I've seen this week. One, the squeeze is now ticking higher where it was not before the week started. Two, as of yesterday or today, I can't quite tell. It looks like today. You actually have a thrust signal higher on the high-low, which is starting to cancel out some of the thrust lowers from back there. So that's progress. In terms of the moving averages, this has crossed positively, and more importantly, the 8 and 21 on the daily time frame has crossed positively. The last time they crossed negatively was up here, so now it's doing the inverse. So that is progress. In terms of making higher highs and higher lows, there's a high, or there's a low, excuse me, there's a low, and there's a current low. So we do have higher lows. There's a high, and there's a higher high. We do have higher highs. So there is that. I'm going to give you guys 4 points here. If you're interested in learning more about this, we cover it in the report that I do every week. It's called This Week in the Markets. But here's 4 things that I'm looking at. The dollar. Because the indices, when they trade in a box like that, they don't give you a lot of information. So you do have to kind of read between the lines. The dollar, is it below 104? Below 104, it looks consolidative. Well, as long as it holds above 101 and a half and below 104. It looks to be in a box to me, which is generally going to be a tailwind for risk. Now, if you start to get above these levels, 103, and then definitely above 104, that invalidates the idea. Above 104, the entire market becomes a short. But as long as it trades like this is manageable. So this is actually generally beneficial for the bulls. Not hugely. It would be better if they broke that 101 and a half level, but it is generally a point for the bulls. I'll give you 2 of the 4 points just because they're easy levels to to just leave an alert on your chart. You don't have to do any kind of technical analysis on any of this. Just leave an alert on your chart that if the Dixie crosses 104 to the upside, take action. As long as you don't get triggered on that alert, understand that the bulls do actually have a little bit of tailwind here. HYG above 78. So right now, HYG above 78 becomes even more critical because if it does backtest next week, it's a doubly reinforced level. So you have a long-term Fibonacci level there at 78, as well as your hourly 200. Why does that matter, right? For those of you that might be asking, well, why do we care about the dollar and HYG? I don't trade dollars, and I just wanted to go trade Nvidia. Why do I care? You care because the dollar being under 104 will create tailwinds for bulls, right? As opposed to if the dollar's above 104, then you have headwinds against the bulls. So dollar under 104 creates a slight tailwind to the bulls. The lower that it goes, the stronger that tailwind becomes. But 104 is the level. For HYG, you care because if it gets below 78 again, that then starts to damage the structure. You made a lot of progress here. That's an exceptional squeeze in this market. For those of you that are unfamiliar with this market, HYG is junk bonds. Why do you care about junk bonds? Because it's kind of the canary in the coal mine, right? If things are going to get really bad or things are going to improve, it usually will show up in HYG very quickly. And you don't have to do any technical analysis here, really. The main thing for this is just to stay above 78. So you can just leave an alert there on your chart. On a daily close below 78, that invalidates the idea. You would go full bear at that point. You can short anything. But as long as the dollar is above 104 and the HYG is above 78, understand that the bulls do have some tailwind here to continue to build on what they've started last week. So if we take those ideas and we understand that that's kind of dynamics playing out in the background, very important dynamics playing out in the background, then what do we have this week? Well, we closed the week here on SPY with a positive cross of the 5,200, right? Now, why is that so important? Because we had such a giant move last week that the spread between where price was and where the 50 was enormous. That was like 140 140 S&P points right there, right? That's big because you're actually still good all the way back to the 50. So what you want to see here is for price to actually do exactly this. Trade in a box, consolidate, ideally on lower volume like this. This is actually setting up a little bit of a flaggy pattern there. It's not overly high probability, but it is setting it up. Have the little bit of a flag pattern. Let the moving average come to price as opposed to price crashing down to the moving average. That's happened, right? That has happened. So putting all the pieces together here, last week I gave you guys the targets up there around 426 to 430. It's just where everything lines up for a push, and it would just make June put holders uncomfortable if we got up there. The probability is that we still do. But just make sure that you understand that if the dollar gets back above 104, HYG gets back below, what was it, 80, what was the level again, 86? 78, way off, 78. Dollar below 104, HYG above 78. Give the bulls some credit, some benefit of the doubt that this is just a consolidation inside week and that they're gearing up for a push into 426 to 430. Now, all my cards on the table, I found this week to be very, very irritating, to say the least. I had, and maybe some of you will resonate, I had a very good, I had a very good Tuesday. I had a very good Wednesday. I had a fantastic Thursday. And I had the inverse of a fantastic Friday because I was long. I came into the day long a couple swing trades. So good Tuesday, good Wednesday, fantastic Thursday, the opposite of fantastic Friday. So what does that do? Well, my non-fantastic Friday cancels out my fantastic Thursday. So what am I left with? I'm left with, I spent 4 days in front of the monitors. And mind you, I was swing trading all week except the beginning part of the week where I had day trades. I was in front of the monitors for 4 days. And I only have 2 days worth of profit to show for it because today canceled out my profits from yesterday. That's very irritating, right? Why is that? Well, look at this. Look at what it's like to try to swing trade this thing, right? And when I mean swing trade, I mean you buy it on week 1 and you sell it the next week or 2 weeks later, right? I don't mean like you buy it on Monday, sell it on Wednesday. Buy it 1 week, sell it the next week, and the volatility here is large, right? These are very big intraday ranges, which is not conducive to swing trading. So understand a couple of points here just to put a bow tie on everything. One, I gave you the levels on HYG, and the dollar, and I explained why those are important in the context of keeping the bull's hopes alive. 2, we talked about structure on SPY and the developments forward on the structure on SPY that are actually generally healthy, even though it doesn't seem that way given the volatility. But then the last point is if you have the ability and you have the tools and you have the experience, day trading this market will offer you the most opportunity, right? You can either let volatility turn into a frustration by trying to hold swing trades in a difficult, wide, volatile market, or you can let volatility be your friend as a trader. Volatility is just another word for opportunity. How do you take advantage of that opportunity when it presents itself? Day trade. Start the day flat, end the day flat, show up each day ready for anything, and take advantage of those 2% up and down swings as the market tries to decide what it wants to do. So hopefully that was helpful, guys. A little bit of a different tenor to this video. Normally we try to cover at least one stock or two, but I really just wanted to kind of drive home the progress here on SPY, a couple of outside markets that I'm looking at, and then tie it all together with the best way to take advantage of this volatility is through to transition to day trading. Up or down, the bias, I would still give the bulls 51-49% odds here. So start next week with a fresh perspective that this really could go either way. The bulls still have structure, they still have the dollar, they still have HYG, so I have to give them the edge. But don't be afraid to day trade out there, because that way you could turn all this volatility into your own personal opportunity. All right, guys, well, that's my time. Thanks for joining us on this Friday. Like I always tell you, before you go watch a cat video, drop us a like, drop us a comment, and if you're not already subscribed, what are you doing? Go ahead and leave us click the subscribe button there. It really does help us out with the machines. They like that, so it would really help us out if this content was valuable to you. All right, guys, I'll catch you next Friday. Have a great weekend. Cheers.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me